Thank you so much, Cheryl. Back to the top story of the morning, and that is the Federal Reserve says now is not the time to increase interest rates. The central bank partially blaming, quote, recent global and financial developments that may hurt growth at home, specifically the slowdown in the world's second largest economy, China. With more on the slowdown and how he is adapting and his company is adapting, I want to bring in Mario Longhi. He is the CEO and president of U.S. Steel, one of the companies out there that really is very sensitive to what's happening in energy. Great to see you, Mario. Thank you so much for joining us. Welcome to the program. First, give us your assessment of the global story on an economic basis, because we're trying to figure out why the Fed didn't raise interest rates. What are you seeing out there?
Well, I think that, the world continues to be a very convoluted place in general, and the weaknesses in emerging markets now are added to the China situation. So I think that, a stronger America can make a significant difference in what is going on everywhere else in the world. And I think that for too long we've been putting emphasis on what the Fed does or doesn't do, and we're forgetting that really what we need are different types of policies that will support growth, that will change the overall scenario.
Yeah, no, I definitely want to get into fiscal policies and really what we need to see to move the needle on growth. But really what I'm looking for is what you're seeing. I mean, you're the largest supplier of energy products. We've seen a complete breakdown in terms of the commodities complex, from iron ore, copper, energy. I mean, what are you seeing in steel?
Well, the steel business in general in the United States is under severe attack because, China has been dumping material into this country for a long time. And what we're seeing right now is a ripple effect because other countries are being the recipients of Chinese material, and therefore, with America remaining the most open country for trade, all of that is funneling into the United States primarily.
So in terms of fiscal policy, do you want to see fees? Do you want to see higher cost on some of those cheaper products coming from China?
No, I would reclassify what you said.
Okay.
What we want is a fair playing field. And if trade is going to really help societies to evolve, trade has to be done under the rule of law. And that's all that we're looking for.
How come it's not being done that way?
It's been a long time. If you look back, the definition of injury in trade has been established in 1978. And if you look back at the intent of the law, it was that if you see countries or companies, foreign companies, that are acting in a way that will produce harm to American companies, we should act on it. And that was never really done that way.
Yeah.
It takes about 3 years for you to come up with a case. During this period of time, tremendous damage is created. People lose their jobs. Companies cannot invest enough. And then by the time you win the case, somebody else comes in the vacuum of that. So I think what we really need is to look into a larger frame of assessment of what really harm is. And I think we have created that condition. For example, look at countries that have more than 40 different types of subsidies, while we have basically none. How can you compete with that kind of condition?
Right.
And that's what I mean about fairness.
I see.
So, Mario, as someone who was an investor in your stock in the heyday, when the stock was going from 50 to 80 to 100 to 150, seeing you and all of your competitors down here at these depressed levels right now, it reminds me kind of the energy space. Do you see consolidation? If there were consolidation, would you guys have more bargaining power, and would you be able to get more of a level playing field?
Well, consolidation has been occurring, and what we need is more global consolidation in a way that it's efficient. China today produces half of the steel that is produced around the world, and probably half of what they produce is not necessary nor efficient. So I think that arrangement has to take place.
And if you want to sell steel in China, don't they put a huge tariff on you bringing steel into the
Right,
country?
exactly. So why aren't we putting higher tariffs on their cheaper steel?
And that's what I mean about fairness.
Yeah.
I mean, look at, for example, the energy environment that we're in. The need for energy is going to continue. You have 2 billion people in the world today that still doesn't have access to that. So it's going to be needed. And I think there will be more consolidation in the energy sector. I think what we've seen in the United States, and we're producing still more than 9 million barrels a day, even though the rig counts have come down to a third of what it was.
Mario, just let me ask you a policy question, but related to your company. One of my favorite lines from The Godfather 2 is when Hyman Roth said to Michael Corleone, "We're bigger than U.S. Steel," right? The United States is now far, far bigger than U.S. Steel. We're not just dependent. It's an important company, but we're not just dependent on our industrial companies. What might be bad for U.S. Steel, which is free trade on the U.S. side, might actually be great for the country, right? So should we really? Free trade has benefited America dramatically, and it's a huge part of our growth story. Why should we worry about free trade
Because I think there is a confusion between free trade and fair trade. I think if you are dealing with companies that are not behaving according to the rule of law, and the pricing conditions are mostly to subsidize the social programs in other countries, I don't think that that's a fair approach. I don't think it serves society. I think societies evolve if they all behave under the rule of law.
I think you make such a good point. And these are the conversations that are going on around these trade deals and the most recent trade deals. Let me ask you this. If the Federal Reserve would have raised interest rates yesterday by a quarter point, would that have impacted your business very much?
I don't think it would.
Yeah.
I really
so, I mean, were you surprised that the Fed didn't move?
I am, because like I said in the beginning, I think there is enough turmoil out there that there's always probably going to be a reason that they can go to and not do anything.
Have you had a chance to sit down with President Obama and talk to him about the challenges that you're facing?
Well, we talk to the administration quite frequently, and not only with the president, but we talk to Congress too. They have to come out of this situation where...
Do you feel like they're listening and responding?
Well, I think they listen, but they don't hear. I just came out of a trip that we did to Ireland.
Well, maybe they're hearing but not listening. One of the other.
I just came out of Ireland. And you walk around the country, there are cranes, there are young people happy and going about, there are new companies coming about, you have older people with jobs and work, and they have, what, a 12.5% tax rate?
Unbelievable. And then there's the EPA. Let's not forget about the EPA regulations. Real quick, steel is so critical in housing and in the auto sector.
And for national security.
And for national security.
You can't forget this important part of what we do.
So where would you say, in terms of sectors, the growth is at U.S. Steel in the coming 3 years?
Well, we have a very significant presence in automotive and industrials and in energy. And even though, for example, the energy side is really impacting hard our company, because we're not only a very large supplier, but our divisions supply the energy segment. So it's kind of a double whammy impact on our company. But we have, for example, coming up with new products in all of these areas. I think growth is going to come. And our company is focusing, looking into the future in two dimensions. Is the economy will recover eventually and will benefit from it. But we're dealing with everything that we can control internally to generate the kind of capability to go through these difficult moments and come out of it in a better place.
We'll be watching, Mario. Great to have you on the show today. Thanks so much.
Thanks for having me.
Terrific insights as usual. Mario Longhi there is the president and CEO at U.S. Steel Corporation.